Welcome to the Nano podcast. I'm your host, Will Chernlin, and I'm excited to have you join me on this journey through the world of nano companies. For the past decade, I've talked to thousands of business owners across various industries. It's been an enlightening experience revealing the vast tapestries of entrepreneurship and innovation that thrives beneath the surface of mainstream media coverage. Each week, I will interview different leaders of nano-cap publicly traded companies to learn about their history, what they do now, and their future. As a reminder, none of this information is financial advice, and it is all for entertainment purposes only. Let's start this week's episode. Hi, everyone. This week we have Kimball Carr, CEO of Inspire Veterinary Partners, stock ticker IVP. Inspire Veterinary Partners owns and operates veterinary hospitals throughout the United States. Kimball, thanks for coming on the podcast.
Thanks for having me.
So, Kimball, I went through your LinkedIn, saw a bit of your work experience and such, and you kind of throughout your career have been the animal health veterinary expert at multiple different places. But kind of what got you into that industry in the first place? I saw you're at like Starbucks and such. And so what got you into kind of the animal industry in the first place?
Yeah, thank you. I would say for the first half of my career, I certainly was not the animal health expert. I had the pleasure and the honor of working with some really high growth companies in other spaces, whether it was consumer products and beverages like my years at Starbucks, and spent the first part of my career in digital content creation and doing some work in the advertising world and the training world. The last 15 years or so have been in veterinary as a layperson. You would not want me doing a spay or a neuter on your pet. That would be bad for all of us. But I started that 15 years with about 8 years working for the largest provider in our space, the largest owner operator of clinics in the US, and just really became enamored with the industry, protective over the clinical professionals that lead this industry. And we wanted to do something different when we founded Inspire.
So before you did Inspire, you're working in the pet industry, and I'm not sure if you got burned out for a little bit or if you just wanted to have some fun, but tell me where the idea of opening up a surf shop came from.
Yeah, it's funny. We took a couple of years off after that eight or so years I mentioned working, managing a very large portfolio for that large veterinary provider I mentioned. And a brother-in-law of mine is an expert in that space. And we tried our hand at a brick and mortar retail store right before COVID. So really brilliant strategy on our part, but had a fun time while I was consulting and doing a bit of traveling and working with some companies in the veterinary space, sort of on the weekends and some of my free time running that shop. Just as I would not do a spay or neuter on your pet, I'm not a very good surfer, so I don't look good on a board. So that was a fun little diversion for a while, and then it was back to regular work.
Yeah, I would love to hear just a little bit more about that, just from the point of view of you had such a career at that point already in like large corporate world. And now you're like actually touching the widgets that you just placed the invoice for. You know the cost of goods sold. You're trying to sell it, get out the door because you need to pay rent. When everything was so like, I guess like localized and real and you could touch it. What kind of lessons did you learn that maybe you didn't have previously going into your career where maybe you were kind of floating from a 10,000 foot view?
Yeah, well, it's a great call out because it really did. I spent a couple of years getting back to the roots of many, many years previous, decades previous, where I had been in food and beverage and then spent that 11 or 12 years with Starbucks, the beginning of which was opening stores for them, a ton of expansion, working directly with customers, being in stores a lot before I became a multi-unit leader with them. And so that couple of years running a shop, very small, very direct, as you say, very intimate with customers, touching every invoice, touching every dollar that went in and came out. Really sort of reawakened some of those detail at the unit on the ground, business to customer sort of manifestos that have been drilled into my brain in years earlier by great companies I had an opportunity to work for. And that set my mindset toward, as we talked with partners and co-founders about founding Inspire, some of those things we want to make sure we hold dear as it relates to the promise we make to a client or what service means, or the feel of our individual hospitals as we acquire them, letting them have their own identity and their own branding and their own relationship with their local community. So it was really kind of a nice palate cleanser during that couple of years to sort of get us ready to found Inspire.
So you're in Virginia Beach, you're waxing a surfboard at the surf shop, and then you get a call saying, hey, we're looking for a CEO. Well, tell me about how that kind of process happened, how you got connected, what got you excited about it at the first place that you said, hey, this is what I want to spend the next 5-10 years of my life doing. Kind of how did that process go down and what got you excited?
Yeah, so a little different than that. So, I'm waxing a surfboard, and there were some PE companies that said we're looking for a CEO that were buying into the veterinary space and doing the consolidation game that's well underway in our space, just like human medical, human dental has been going through the last couple of decades. And I said thank you, but no thank you to a number of those calls. I didn't want to do another Me Too consolidator. I didn't want to be another group buying hospitals to quote unquote flip them in 2 to 5 years. And so I'm the one who made the call to a few partners and said, hey, let's us found something. Let's do something different. Let's take a page from some books of companies that I very much admire, some of whom I've been a part of in my past lives, that founded a company to do something different in a space, had an expertise in this space that was over and above what some of the folks have that are running some of the PE-backed organizations, many of whom are well-meaning, but some of whom are in this for the short term. They want to buy and flip, and that is as it needs to be. We have a different mindset, which is a long-term mindset and a mindset designed toward sharing equity, giving back, helping veterinary professionals do something that hasn't been done before in our industry. So it was a little different. The phone calls I did get, I said no thank you to, because it was would have been a repeat of what I'd done in years past. We founded Inspire very proactively to be a different kind of veterinary company.
Yeah, so we've danced around it a little bit, but as you mentioned, the traditional PE firm is trying to buy and flip it or recapitalize in the first 3 to 5 years type of thing, and that didn't really interest you. So in your own words, what is Inspire Veterinary Partners? What makes you all different?
Inspire today is the only publicly traded multi-unit veterinary organization out there in the American veterinary space. And we were founded with the goal of going public early, with all of its goods, bads, and uglies, toward having a founding model and a growth model that was different than the PE-backed consolidators for a couple of reasons. We take a long-term view at the hospitals we buy, so we value them differently. We're a little more conservative, and we're long-minded. We want to be in the community we purchase a hospital in for 10, 20 years, not just 2 to 5. We're founded by a number of veterinary professionals that have deep acumen in this space, and we understand the challenges our clinical professionals go through. We understand that traditionally, particularly for a doctor, there have been two paths to growth in the industry, which is I can be what's called an associate doctor, a work for hire doctor, and try to pay off my loans and make a great earned living. Or I could be an owner of my own clinic, and that takes me into managing HR and cost of goods and all the stuff I didn't go to school for. And so Inspire was founded with the goal of driving equity programs deep into our workforce early on in our evolution so that we provide another path to wealth for veterinary professionals. We look forward to turning on those equity programs very soon so that we have stock being shared widely and deeply amongst our organization, which is something, quite frankly, not happening elsewhere in the veterinary space. Any equity sharing is often sort of the top of the pyramid. There are large operators in this space that don't share equity at all in the business. It's a shorter term mindset for most of the acquirers out there that are looking to get in and make money, which is certainly everybody's right, but then get out of an industry they're going to spend a short amount of time in. And so we founded Inspire with the absolute premeditated goal of taking a longer view, investing in the space, understanding the space, and growing as we continue to expand.
So when you joined Inspire, was it a family office and a couple MBAs saying we got an idea and a checking account? Did they already have a few companies and they were trying to roll up a few more clinics? Or kind of what phase were they at when you joined?
I was one of the co-founders, so the phase we were at was it didn't exist,
Okay.
and the idea had started with one of the co-founders to be a minority investor in a few small clinics, to be an independent investor, minority holdings in one or two individual clinics, and a few folks had been talked to in that early seed round to say, yeah, we're all going to put in some money into the veterinary channel, as many had, to again be sort of silent or semi-silent owners in a few clinics. And in the meantime, I had built some relationships within the space that had taken companies public before, had wanted to really do something different, as I said, that differed from some of the meetings I took in the PE-back space so that we could have a longer-term outlook, offer equity, run a company differently, really structure the expansion of a company differently with a longer-term outlook. And so we took that idea, being a minority investor in a couple of hospitals, to my suggestion to this group of investors: why don't we start buying hospitals en masse, really have a growth plan, build this thing to a larger scale, take it public early, leverage that public structure to do some things that were innovative. And that's how Inspire came to be.
And I think heard you mention in another interview about just like the tailwinds of just the demographics of pet ownership and such. and how that kind of feeds into why you guys think more long term. Do you mind kind of just expanding on kind of what the hopefully 10, 20-year plan is, just according to the demographics?
Sure. Yeah. So if you look at the veterinary channel, whether it's the over-the-counter channel, food and nutrition, which we've seen explode in the last 5 or 10 years, and certainly the pet care side, the side where we would take our dog and cat for their regular health checks and their wellness care and also their sick care. The spend in the veterinary channel continues to go up decade over decade. And the joke I like to make often is we're buying Halloween costumes for our dogs and cats. We've really gone crazy as pet owners in the world.
To your point, just a half generation ago, no one's even heard of pet insurance.
No, exactly.
Now it's like almost mandatory.
And you have companies like State Farm and others that have gotten into that game, and certainly Trupanion, which I spent some time with, that I think really do it well. And that's a method to pay for great care where we're keeping pets alive longer. We're extending life expectancies, which we know statistically improves the quality of life for humans that are their counterparts. So we know pets in our lives equals a good thing. And so the industry, based on those trends and based on the millennial patterns of sort of starting that practice family with a dog or a cat or a gerbil or a bunny, we know that pets are here to stay. We know the spend is going up decade over decade. And the blips we have, like a COVID blip or like some recessionary blips, are just those. And so statistically, if we look back decade upon decade, the spend is going up. The ability for us to care for pets is expanding with new technologies. It's incredible what we can do for pets now. And life expectancies as a result have gotten better, and that's making us happier as humans. And so it's a really wonderful industry to be a part of in terms of a nexus of a lot of really good indicators for future growth, allows us to take a longer term view from a perspective of being an acquirer in the space and looking at a hospital we may want to purchase in any of the lower 48 states and say, hey, when we're here 10 years from now, what's this market going to look like? Because that's the outlook we want to have. And so it's an industry that really lends itself to that because the indications have been very, very strong for decades.
So I have a two-part question, and sorry if I get long-winded here. So first off, what makes a great veterinary clinic from the point of view of, is it like monopoly on location where there's just not another one nearby? Is it one where they're in some higher middle-class suburb where everyone has 2 golden retrievers? And so you just get a million kind of checkup calls all the time. What's the best like cash flow generating possible veterinarian clinic could you imagine? And then on the opposite side of things, what's the Venn diagram of what you're looking for when you acquire one? Is it exactly what the perfect one is? Or do you like one that where, hey, we really like the southeastern part of the United States first, and then we'll think about other regions? Or how do you think about it from an acquiring point of view? So I'd like to hear from just like the owner operator point of view. What's the ideal clinic that you could possibly set up if everything was perfect? And then what are you looking for?
Yeah, thankfully for our purchases, perfect is a pretty big center of the circle. So perfect and near perfect can be a lot of things for us. And you mentioned geography from a global perspective, or let's just say a national perspective. We look at geography very agnostically. We purchase in all the lower 48 states. For a time, we had a hospital in Hawaii. That was a bit too far for us. So we've sold that hospital. Everybody wanted to sit on the beach, of course.
Yeah, but a lot of late night meetings.
Absolutely, yeah. Everyone wants to visit that one. So the lower 48 will be, our target area, and we will cluster within that area. We purchased our 5th hospital in Florida yesterday. So Florida is looking to be a hub where we will grow more out of for some wonderful, obvious reasons, some good demographics, some great cities, some great areas to work with. But we will look broadly, and that's a part of a larger conversation because as we look at acquisition opportunities, looking at a large amount of potential acquisitions coming into the funnel allows us to be selective, and that's part of a process. In terms of what makes a perfect hospital or a hospital that's great for us to buy, culture, leadership mentality at that hospital, quality medicine, some market demographics and market awareness, as you mentioned, are really important. So we want to make sure there is a population to be served, obviously. These are operating businesses that we buy, and so we're going to look at 3 years of history for a hospital, which is a bit farther back than some of our counterparts go, not only because we want to see their financials and do a valuation based off of that, but we want to see what this hospital is doing culturally, medically, and financially over that period of time to sort of see what the growth story looks like. And to the point I think you started to touch on, less than perfect is good for us too, because we have a really, really knowledgeable team. And we're seeing examples within our portfolio now of us getting into hospitals and responsibly getting labor in a better place, responsibly getting cost of goods in a better place, finding margin in those areas without being, screw tightening minded in terms of bringing pain to a hospital. We want to make sure we keep the quality of medicine and the quality of service high. And so things that are imperfect are wonderful opportunities for us to partner with a hospital and do even better in years to come. So it's a wide range of things we look at.
You talk about imperfect and trying to kind of drive efficiencies and such. How do you feel from a asset heavy or asset light point of view? You want veterinary clinics to own their actual building and such, to you'd like it better if they rent, or you want to become super asset heavy where you guys actually have your own distribution center to all your clinics because you're buying everything at scale. You're actually driving efficiencies through just scale. How much do you think about that? And where do you guys see the roadmap going?
Yeah, a lot. And there's sort of two or three things there. First is that we're one of the only consolidators that when we can and when the conditions are right, we purchase real estate along with the business when we buy it. Very few consolidators do that because they're here for a short time. They want to recap in 2 to 5 years, and that's a complicated proposition for them. We found real value in owning the land and the building. It gives us expansion opportunities. It gives us a value on the balance sheet. It gives us that longer term outlook of what we want to do with that hospital in terms of growing in that community. And the other piece of that is what are the verticals we'll get into in years to come. Right now, we have wonderful relationships in purchasing and technology, and we're working with some of the biggest partners in the industry. We work with some of the same names that companies many times our size work with. We're already seeing buying power from our size, even at the comparatively smaller size we're at today. So we'll continue to leverage that. And in a year or 2 or 3, we will look, as we already have begun to look, at things like technology, lab, distribution, other things that are innovative within the virtual space, the AI space, the telemedicine space. Can we acquire and buy into and develop into some of their other areas so that we're feeding ourselves with some of the technology and the other verticals and the other paths to revenue that are part of this space? Because it's a very, very diverse industry that's not just clinics. There's a ton of other things that we can get into in the years to come.
So what does Inspire, and how do you all feel about brand? Do you like them to keep their own brand in each of their locations? Do you want them to all be under the Inspire name and then Inspire by Bob's Veterinary Clinic? How do you kind of approach that in kind of, as you say, as you slowly kind of systemize things and try to get everyone in kind of the same processes?
Yeah, very decidedly, very deliberately, we want each hospital to maintain its own brand. So if they were Main and Main Veterinary Clinic before we bought them, they will remain that after we purchase them. And frankly, if a client never knows Inspire exists or never knows we own their hospital, that's just as well to us. We want them to have that local feel. They know Dr. Smith. They're working with that hospital.
You're like a referee almost, where the less we hear about you, the better.
Sure.
Then you're doing a great job.
Sure, yeah. And the less you get angry at us, right? Because we made the wrong call. Sure. From a B2B perspective, we want to be known as an employer of choice and a great acquirer and operator of hospitals. From a B2C perspective, there will be a time when the Inspire brand may be known from a shareholder perspective, or as we get into other avenues and verticals we talked about earlier. But within the clinics, if a client has enjoyed a relationship from multiple generations of their dogs, and they know Dr. Smith and they know Main and Main Street Hospital, that should continue to be their relationship. They don't need to have a relationship with Inspire, and that's fine with us. They may see some of the benefits we bring through our ownership, but those should be transparent and maybe invisible.
And so as you're looking at all this data, you're looking at all these demographics and such, have you ever felt the urge to say, we got to start a clinic from scratch, or we got to use one of the brands that we already have and say this is going to be their second location type of thing? Have you all done that or looked into it? And how do you feel about build versus buy?
Yeah, we've begun that. So in Texas, we relocated a clinic and leveraged a trade name that we registered in that state, which has been registered elsewhere. So that would indicate we've got plans for this in the future, called Family Pet Care. So in the Sugar Land area, the suburb of Houston, which coincidentally I grew up some of my years in when it was much smaller than it is today. We've got a beautiful clinic that we built out and that is ready to really be a growing clinic, and a great example of us intentionally not buying the real estate because we knew we wanted to move this clinic closer to sort of the city center and suburban density central, and leverage that trade name, a build out, designed a hospital from scratch that really fit our idea of what a modern hospital can be in terms of what we would call general practice plus. It's really a well outfitted hospital where we can do a lot out of that clinic. And we will do more of that, whether it's relocating clinics, whether it be de novo growth, whether it be really careful entry into new markets with those kinds of hospitals. We now have a template, so to speak, of some hospital build-out structure that we can reuse.
That's what I was going to kind of ask, is how much of this kind of just a proof of concept to be like,
Yep.
okay, we started from scratch. We actually built it. It's beautiful. It
Yep.
works great. It's
Yep.
profitable. Perfect kind of thing. That's very cool.
We can replicate that now. Exactly right.
So I think basically any of my listeners out there definitely know from the point of view of like what a veterinary hospital is. You take your cat or dog in, they maybe swallowed something they shouldn't have or whatever. You get it taken care of. It's pretty straightforward. On the other end, I was reading some about your veterinary skills in equestrian.
Mm-hmm.
How does that work? Because from what I've seen in my life, a lot of it is you show up on location and that the horse doesn't actually come to you. And so how does that scale? Do you have less physical locations? Do you have like a huge barn that you can actually like store 12 horses that you're helping at once? Like, tell me more about that.
Yeah, so a little different than having to take your Cocker Spaniel in for her vaccines, right? A little
Exactly.
bigger visit. So we have a facility in Ohio that certainly services the small animal, companion animal pet. But out of half of the facility, we do have a roll-in facility that we're able to service equine clientele. We have a board-certified equine surgeon there, a very knowledgeable gentleman who has spent years and years in the veterinary space and knows the horse world. And he also, and that team that supports him, will also travel out to local facilities. We'll do some show business where we help the show horse community. We help the racehorse community. So a pretty broad base of clientele there that in addition to their dog, the cat, the gerbil, and the rabbit. And we will, if they have the horses, they'll roll them in or we'll go to see them. And it's a different sort of, provision of services, complex in its own way. We would certainly want to make sure that the sport horse is taken care of, that we're doing the right care for them. It's the preventatives that we might ordinarily make sure that we take care of for a dog and cat, but quite a bit more complex in some of the things those animals need because of the way that their owners or their trainers may need to serve them.
Yeah, and I can see too with the cats, the dogs, the TAM is huge, but also because the TAM is huge, it's hard to kind of direct your marketing sometimes. Where with the equestrian market, it's a lot more obvious where people who own horses hang out. There's only so many stables they can be at. There's only so many shows they can go to. Yeah. And so, yeah, how do you balance that of like one is like a very obvious like go to market strategy, and the other one is like the world's your oyster, which can be good and bad since constraints usually breeds creativity.
You're right. The funnel is different. The 5 degrees of separation are a bit different, but very compact in the equine world. Everyone knows everyone in that world. And so you have a situation like we have where we have a board certified doctor who's got a deep expertise, a clinic that's used to helping those clients, a community that knows that we exist, being out at the shows, being in some of the sporting facilities, talking to this trainer or that trainer. Folks know everyone. And so it's been wonderful to be a part of that community. And there are many others. That's the Ohio equestrian community, but I'm in Virginia, we've got a big community here. All over the country, there are pockets of that. And so we may, as we continue to expand, see more service within the large animal space and serve those equine clients. And each of them is their own ecosystem. So we'll look forward to sort of that 5 degrees of separation as we grow.
So as you all grow and you acquire clinics, in that first, like, say, 2 to 5 years of owning the clinic, what's the main KPI you're trying to optimize for? Is it cash on cash returns? Is it paying down the debt on the buildings so that you have a solid asset for life that you depreciate? Like, what's the kind of main strategy and number you're looking at that you're like 5 years out after acquiring one, you're like, this was a home run because this number looks like this?
It'll depend on that conversation we had a moment ago around in what condition that clinic comes to us. Was it a B plus that was churning really, really strong profit? And this is sort of a maintain, keep growing it, find efficiencies. Maybe it's some margin management. Maybe it's the replacement of the doctor talent as they contract out and finish their 2 or 3 years with us and sort of just continue the upward trend. Was it a B minus that had some decent profit because we buy profitable clinics, but there's a range of profit in what we buy. And so therefore, EBITDA is the number we want to look at the first 2 to 3 years. We want to say, hey, we know this hospital can do X. Let's grow it to that. And what are the things we'll do to grow that? Maybe it's growing top line and a portion of that improves the bottom line, or it's some efficiencies and some things we saw, as we talked about earlier, and the ability for us to operate really margin minded. So it's going to be different in every clinic. Certainly what it is a very responsible, what I like to say, boringly consistent growth story. The veterinary channel has been boringly consistent in that upward trend. And veterinary professionals, when we're providing medicine, when we're providing care and service to clients, being very consistent in the way we operate, and seeing those pet visits continue to comp themselves, seeing those owners come back, and maintaining that growth ramp in a very sort of consistent way is what we want to look for year upon year. We don't need to see huge spikes either up or down. It's a nice, good growth story we can maintain if we manage it correctly.
Have you noticed that you can I'm in the e-commerce world, so they always say trying to just make your average order volume bigger. Have you noticed that you've been able to do that with your customers as you've been able to kind of just show them that there's more products out there in the market and show them that there's more things that might be available to their pet? Have you been able to go into most of your different clinics that you've acquired and say, hey, our average customer was making us $500 a year and now they're making us $700 a year? Is that kind of one of the main drivers of revenue expansion?
It's a driver. It wouldn't be the main driver when you look at the weight of what happens within a service, industry. When we think about, whether you call it covers or checks or visits or clients per day as different sectors measure it, the number one driver is going to be number of visits, number of appointments per day, per week, per month. And so we want to make sure we're driving that. A key indicator within that, and we're seeing some really wonderful upsides, we're seeing that number grow for us, is what's that new client number within that visit number. And then third would be APC, average check, average patient charge, ATC. It's called different things. And that is up for us as well. And we're seeing some good movement within that. And that's driven by the right organic things you'd want to see. We don't want to overcook that number in a time where we've all heard the word inflation a lot the last 2 years. We're not an incredibly, inflation is not an incredible challenge for the veterinary industry, nor are things like tariffs. We're insulated from a lot of that. But we want to be margin-minded and cost-minded, and as costs do go up, we want to respond to that. But again, kind of going back to that peak and valley conversation, we want to be really consistent with the way we treat that. We don't want to have sticker shock enter in and a client realize that this year my pet visit's costing me twice what it was last year. A little bit of increase is reasonable because we know cost of business goes up. So the big driver is visits. As we manage that driver and seeing clients come in through our doors, seeing the number of transactions increase year upon year, that's the biggest comp measurement we want to see.
Well, Kimball, as we wrap up here, what does the next 5 years look like? What gets you excited, get out of bed each morning? What are you excited about within the business, and where do you see it maybe in 2030?
I am extremely excited that we are back to acquiring and expanding, as evidenced by our closing of our 5th hospital in Florida yesterday. We've got a funnel of really, really wonderful hospitals we're looking at right now on our business development team, and some wonderful states that we're already in that we will expand into, some new states that we don't currently operate in, and that the growth path the next 1 to 5 years is going to equal a lot of horizontal expansion, a lot of vertical growth within our group of our hospitals. And in the coming years, as we mentioned, we'll get into some sectors and some aspects of the veterinary channel that we aren't currently in today. So we will expand and go into some areas that really have some upside for us and feed our existing business in a really healthy way. So the next 1 to 5 years is going to be a high growth time for us, and I'm excited about the things ahead for us.
Awesome. Well, Kimball, if people want to hear more about what you're working on, what you all are doing, where should I send my audience?
InspireVet.com. Visit us there and see all the investor news and the latest that is happening with us. You'll certainly find us in all the social channels as well. Watch for our releases as we continue to grow.
Thank you so much for coming on the podcast. And for those of you still listening, please remember to subscribe and review. Thanks.
Thank you.
This podcast is for informational purposes only and does not provide financial, legal, or any other advice. The information is not investment advice or any offer to buy or sell any securities or to make any investment. The views expressed by the guests are their own, and any reference to third-party products, services, or information does not constitute an endorsement therefor by NanoCap Podcast or its affiliates. The NanoCap Podcast express disclaims all liability for any individual's use of the information presented in this podcast.